So what's up guys, hello everyone, hope you're doing well, and in this video we're going to see a lot of must brush up formulas and must go through things on exam day morning. Most likely I'll be releasing a second part also shortly because I don't want to cram you guys out. So let's quickly check and let's quickly see what are the things you should keep in mind. Most of you already know this, but if this 5 minutes might well help you out on the exam time and you can quickly check this out. So let's quickly get going. First one is computation of beta. So totally three methods are there, and one is covariance of market and security by variance of market. Variance is equal to standard deviation score, which you know very well know. So beta is equal to covariance of xm by standard deviation of market, or nothing but variance of the market. Next one, how you can arrive is beta is equal to sum of, you can see this, the attached estimates there, sum of xy minus n into n into x mean and x bar y bar, that is the means of security and market respectively, by sum of x square minus n into mean of x square. So this is the most often frequently tested formula also. So next one is beta is equal to change in security by change in market. A question came from this last attempt, so give more importance to the first two formulas. So moving on to the next one, how to compute correlation coefficient, covariance by product of standard deviation of two securities. I repeat, correlation coefficient is equal to covariance between securities in the market by product of standard deviation of two securities. Next one is how do we calculate returns. So return is equal to D1, that is dividend of the dividend after giving effect to the growth, plus P1 minus P0 by P0 into 100. Then CAPM formula, very important, very easy also. RF plus beta into RM minus RF. RM minus RF is nothing but the risk premium. Next one is Sharpe ratio. So return on security minus RF, that is RM minus RF by standard deviation of return on security. In case of trainer, instead of standard deviation it will be beta, the numerator will be same. So arbitrage pricing theory, E of R is equal to R plus lambda into beta 1 plus lambda into beta 2. You can give less importance to this, but it's very important to know also this. You can follow this in your future as well whenever you buy or invest in securities. So moving on to the next one, mutual funds. Effective yield is equal to total yield. How do we compute total yield? Total yield you can compute by based on the, you need to arrive at the number of units which can be arrived using amount of initial investment by NAV, so that the number of units into the final NAV as on 31st March or whatever date that is given. So if you do that, and if you the difference between that final value minus initial investment will give you one yield. If you add that with the dividend, anything is given, that is the total yield. So total yield minus initial investment into 365 by number of days into 100 will give you the effective yield. Be very careful because it's 2024, so watch what the question specifies on 366 days. Just ensure you don't lose mark on minute things. So next one is redemption price is equal to NAV by 1 plus back end load. Next one is calculation of issue price, that is opening NAV plus entry load plus dividend equalization paid on issue price. In case of repurchase, instead of adding the entry load, you have to subtract the exit load there. So next one, capital budgeting and mergers. Optimum replacement cycle is equal to PV of cash outflow by PV personal manufacturer. The lowest of the three options or two options which will be given, that should be the considered as the option for you for the replacement. Next one is coefficient of variation is equal to standard deviation by mean. So next one, how do we compute profitability index, which is nothing but discounted cash inflow by initial outlay. Next one, how do we compute sales value? Sale value is equal to annual cash flow plus fixed cost by PV ratio. So next one, in mergers, this is very important. Many candidates get doubt on this. So how do we compute risky weighted assets? It's nothing but total capital by capital adequacy ratio. In this problem you can see it's 180 by 5%. So that will give you 3,600 lakhs. A little bit of application will help you with these things. That is risky weighted assets equal to total capital by capital adequacy ratio. So next one, return on equity is equal to earnings after tax by equity funds into 100. Why should I come to this? Because growth is equal to return on equity into retention ratio. I hope you are clear up to this. So next one, that is future value is equal to S e power RT. How to compute e power RT easily is equal to 1 plus R square by 2. So next one, edge ratio. Edge ratio equal to portfolio value by price of future contract into portfolio beta. So how do I compute number of Nifty contracts to be sold is equal to, in case of given adjustments, current beta minus revised beta into market value of portfolio by Nifty futures into Nifty bonds. So most likely Nifty futures will be 8125 or 7500, etc. Nifty bonds will be rupees 200 or Nifty whatever value as the case may be. So next one on interest rate risk management. Next one on international financial management is a very important question, frequently asked, that is the GDR program. So if when net issue is given, you need to arrive the gross issue, then from that number of GDRs to be issued, you will get a gross issue by issue price by GDR, that is issue price by GDR by exchange rate will give you the issue price per GDR. So I hope you found the discussion very useful. See, within 5 to 6 minutes we were able to discuss a lot of things. As I told in the beginning, I don't want to cram you out, so I stopped with this. I'll surely try to come up with the next version also if required. But if you are very thorough with this, will be very helpful. Do ensure you watch this on the exam day morning as well as before going to bed on the previous day. It will be very handy. This data will help you and it will reach your subconscious mind. So make the most of it. Best wishes and have a fantastic time again. Stay focused.